Sole trading concern is an individual business. He contributes the capital, he takes the risk, and he takes the more interest, because if he does not take the interest, he is the sufferer of the loss. It is a one-man show. So trial balance is taken from ledger balances. Ledger balance is taken from the journal entry. Whatever the difference comes is a net profit transferred to capital. Debit side, sales return. Credit side, purchase return. I am your Dr. B.S. Subramaniam, Professor in Commerce and Management, Vidhyaashram, First Aid College, a Temple of Excellence, MYSURU. I am going to hand Financial Accounting 1, Session 7 of first year B.B.A. The chapter goes Final Accounts of Sole Trading Concern. What is the chapter name? Final Accounts of Sole Trading Concern. What is Sole Trading Concern? Sole trading concern is an individual business. He contributes the capital, he takes the risk, and he takes the more interest, because if he does not take the interest, he is the sufferer of the loss. It is a one-man show. It's a one-man show, so he will definitely take the interest. Sole trader means single-man business. So we already saw in the last session 4 or 5 problem. Now we are going to start another problem with a good adjustment. I am going to explain what the problem contains, what is a trial balance, how to work out the problem. We'll go to problem now. So they have given a trial balance. The following balances were extracted from the books of Mr. Mohan Garments. On which date? December 2014. So start with January, end with December is called calendar year. Start with April, end with March is called financial year. So it's a calendar year. He has given the trial balance. So before going to solve the problem, you must understand what's actually mean by trial balance. So trial balance is taken from ledger balances. Ledger balance is taken from the journal entry. First we will pass the journal entry. Journal entry to ledger, whatever the ledger balance you are going to prepare one by one, salary account, rent account, capital account, we are going to write it here. All the names, whatever the ledger balance we are going to prepare, all the names we are going to retain. Then there are two sides, one is called debit side, one is called the credit side. What is debit side? What is credit side? Debit side shows assets and expenses. Credit side shows incomes and liability. What's the debit side? Assets and expenses. Credit side, incomes and liability. On this base, the trial balance has been prepared. But generally, it shows the arithmetical accuracy of books of account. If the trial balance is correct, so we can prepare final accounts. We say final accounts of the sole trading concern, which has got 3 divisions. One is trading account, one is profit and loss account, one is the balance sheet. Which are the 3 categories are? One is trading account, one is profit and loss account, one is the balance sheet. Trading account, it gives the result of gross profit or gross loss. Nothing but purchase and sale. Just direct expenditure will be taken into consideration. The result will be gross profit or gross loss. Assume that you purchase the goods worth of rupees 70,000 and spend 10,000 for wages in order to bring from Bangalore to Mysore. What's the total cost? We say 80,000. It has been sold for 1 lakh. The difference 20,000 is called gross profit, we say. So all direct expenditure, manufacture expenses will be taken into consideration. Common now, what are the manufacture expenses? Wages, carriage inward, coal, gas and water, and freight charges. All these power, all directly connected expenditure will be taken into trading account. Then the same gross profit will be transferred to profit and loss account, where you are going to have indirect expenses. What are the indirect expenses? Indirect expenses and indirect income. Discount allowed, discount received, rent paid, rent received, commission paid, commission received, advertisement, printing and stationery, interest on capital will come on the debit side, interest on drawing will come on the credit side, depreciation, fall in the value of the asset will come on the debit side. All indirect expense will be taken in the profit and loss account. The net result we are going to arrive. What is the net result? It is a net profit or net loss. Net profit will be transferred to capital. For a capital, it will be added. Profit will be added to capital of the last year, beginning of the year. If there is a net loss also transferred to balance sheet. From the capital, net loss will be deducted. The last part is the balance sheet. So what is a balance sheet? Balance sheet is not an account. It is a statement of assets and liabilities which shows the financial position of the concern. How we are, how financially we are strong, how much asset we are having, how much liability we have to pay, what's the difference of capital. So what it will show, what's the value of the asset, what's the value of the liability, how much capital we are having at the end of the year. Asset minus liability is equal to capital. What the account is saying? Increase in asset, increase in capital. Decrease in asset, decrease in capital. What do you mean by? If the value of the asset increases, automatically the capital increases. Means your asset is your capital. You got 1 lakh rupees, mean your capital also 1 lakh. If the value of the asset increases, assume that the building value is 10 lakh, means you are having 10 lakh. Today the 10 lakh is valuing 25 lakh, means your capital also 25 lakh. Means increase in asset, increase in capital, decrease in asset, decrease in capital. So this is a very good base as the trial balance is considered. Sometimes what happens now, if the same figure is available, I will give you an example. Bill receivable and bill payable. Bill receivable should come on the debit side. Bills payable should come on the credit side. Both have got 6,000 rupees. In BR, bills receivable should come on the debit side. Bills payable should come on the credit side. That's a law. But what he says, no, he put bills receivable on the credit side, bill payable on the debit side. Both are 6,000. The trial balance tally. But it is wrong tallying. It is called, right. They not apply the principle what the debit side shows. Assets and expenses, credit side, incomes and liability. What's the debit side? Assets and expenses. Credit side, incomes and liability. It's a very good base in order to do the final account. Then, before doing the problem, what you have to understand, no, whatever the items that is given in the trial balance should appear only once. Whatever the item that is in the trial balance should appear only once. The items in the adjustment should appear twice, minimum 2 times, maybe 3 times. So whatever the items comes in the trial balance should appear only once. Whatever the items come from the adjustment should appear minimum 2 times. There is the basic. So before solving the problem, what you have to do now, you have to go through when the adjustment means make a mark with a pencil. Some mark should be there so that we can understand some adjustment is there. Now I will go through your trial balance. Opening stock will come on the trading account. Purchase and sale, this 67,600 is the purchases, trading account credit side. Sales will come, trading account credit side. So what is this is? Purchases, trading account debit side, sales, trading account credit side. Here written inward, this is written outward. Written inward means sales return. Written outward means purchases return. What do you mean that? Written inward means sales return. Written outward means purchase return. This should be deducted from the sale. This should be deducted from the purchase. This should be deducted from the sale. This should be here. Like purchases return, sales return should be shown in the trading account. So debit side, sales return, that is written inward. Here 3,200 is written outward, purchase return. Written inward means sales return, written outward means purchases return. Then carry inward, trading account. Carry inward will come, trading account. General expenses, profit and loss account, debit side. Insurance, profit and loss account, debit side. Scooter repair expenses, profit and loss account, debit side. Salary, profit and loss account, debit side. All are expenses going on. One is directly connected, another indirectly connected. We'll move on. Then, cash in hand is an asset. Debit side is an asset. Scooter is an asset. Then, furniture is an asset. Building is an asset. Then debtors is an asset you have to receive from the customer. Wages, trading account. Then discount, which side is there? Credit side means received. This is received. This will come profit and loss account, credit side. P, profit and loss account, credit side. Then what we have got? Bank overdraft is a liability. This is a liability. Directly it will come on the liability. Then commission, which side is there? Credit side means received. It will come P&L account, credit side. Then what we get? Creditor is a liability. Liability side. What we next? Capital will come on the liability side of the balance sheet. Liability. He contributes the capital into the business. Who is the receiver? Business is the receiver. Business has to pay back 50,000. This is called double entry again. He is the owner. He contributes the money into the business. Who is the receiver? Business is the receiver. Now the business has to pay back how much money? 50,000 to him. We mean to say. That's why it is coming on liability side of the balance sheet. We will move on to the adjustment now. All adjustments should come twice. What is the first one? Unexpired insurance means prepaid, paid more. Unexpired insurance, not expired. This should be deducted from insurance, then asset side of the balance sheet. What to do? This should be deducted from insurance, then asset side of the balance sheet. Salary due but not paid, outstanding. It should be added to salary, then liability side of the balance. Still how much is payable? 2,000. What to do? Add to salary in profit and loss account, then liability side of the balance sheet. Wages outstanding 200. Same thing. Add to wages 200. Still how much you have to pay? 200. The 200 will come on the liability side of the balance sheet. Then interest on capital. On capital you have to calculate how much interest? 5%. Who pays the interest? The firm pays the interest. He contributes the 50,000. Who pays the interest? Firm. On whatever the interest they are going to pay, that will come profit and loss account, debit side. For a business, it is a law. He contributes the capital. The capital is coming in. See the trial balance. What's your capital here? 50,000 is there. Your capital is how much? 50. Who receives the capital? Firm receives the capital to the extent of 50,000. Who has to pay back? The firm has to pay back. So before paying back, the firm has been agreed to pay the interest of 5%. So what's the interest here? 5% interest is there on capital of rupees 50,000. Interest on capital 50,000 at 5%. We are going to calculate 5% on 50. Depreciation on furniture. The value of the furniture has come down by how much percentage? 10%. So where it will come? Profit and loss account, debit side. While you are doing the balance sheet, out of the furniture, 10% should be deducted. Then closing stock 10,000. So 10,000 will come trading account, credit side, and asset side of the unsold stock. Unsold stock to the extent of 10,000. All adjustments should come twice. Trading account, credit side, asset side of the balance sheet. Unexpired means prepaid. Salary due means outstanding. Add to salary, liability side of the balance sheet. Wages outstanding. Add to wages, liability side of the balance sheet. Interest on capital on 50,000 calculate 5%, it is 2,500. Then it will come while you are doing the balance sheet. For individual, for income, for him is a income. Capital is a personal account. For him is a income 50,000. How much interest you receive? 2,500. Depreciation you calculate on the furniture. The value of the furniture, on that how much depreciation you have to calculate? 10%. 10% of the furniture is a loss. Profit and loss account debit side, then liability. Then in the balance sheet, out of the furniture, the depreciation should be deducted. Then closing stock, trading account credit side, then asset side of the balance sheet, where it will come unsold stock, trading account credit side, asset side of the balance sheet. We'll move on to the problem here. See that here capital is 50,000. On 50,000, you are going to calculate interest on capital. Interest on capital, 50,000 into 5 by 100. 2,500. Where it will come? Where this all a double entry, you have to mean, double entry mean for every corresponding debit, there is a corresponding credit. First, debit side of profit and loss. Then, in balance sheet, B by S, it should be added to capital. What to do? You got 2,500, where it will come debit side of profit and loss account. While you're doing in the B by S means balance sheet, it should be added to capital. Your capital account 50,000 will increase by how much money? 2,500. Then there was a depreciation 10%. What's your working note says? Depreciation on furniture 10%. See that what's the value of the furniture? 5,000. Depreciation on furniture. What is this? Depreciation on furniture. What's the value? 5,000. Real value. How much has come down? 10%. It will come 500 rupees. Where it will come? Debit side of profit and loss. First, debit side of profit and loss. Number 2, deduct from furniture on asset side. What is the first item will come? Debit side of profit and loss account. Then while you are doing the balance sheet, in the balance sheet, deduct from the furniture. We'll go to problem now. Your opening stock is 16,000. See the question? What's your opening stock? 16,000. So it will come in the trading account credit side. Then look after purchases 67,000 minus 3,200 and carriage inward is 1,400. You see that? Your purchase is 67,000. How much return? 3,200. It is written outward. What's the real purchase? 64,400. Wages how much? 1,200. In your adjustment, you see that how much outstanding is there? 200. That should be added. 1,200 added. It becomes actual figure 1,400. Your carriage inward is 1,400. Come back to credit side. Your sales is, see the question, your sales is how much? 1,12,000. How much return? 4,600 return. That should be deducted. Closing stock will come in the adjustment. Here, 10,000 will come trading account credit side. By sales, how much? 1,12,000. How much return on the debit side? 4,600. Actual sale become 1,07,400. Closing stock 10,000. So this is from adjustment. If you add the figure 1,710 means 1,17,400. If you bring out the difference is 34,200 is the gross profit. So purchase will come on debit side, sales will come on the, this is written outward, this is here. Purchase return means written outward, this is written inward, then wages directly connected, carriage inward is directly connected. Come back here, so we have made the sale, goods have been written, this is written inward, how much? 4,600, this should be deducted. Balance is 1,07,400, the unsold stock is 10,000, the net result purchase and sale is 34,200, which has been transferred to profit and loss account. You brought down to P&L account by gross profit brought down. How much is there? 34,200. We see these two items now. Discount received is 1,400. Commission received is 1,800. If you see the trial balance, you can understand. Here, what is commission received? 1,800 is there now. How much discount received? 1,400 is there. This is discount received. This is commission received. 1,800. Your general expense is 2,400. Insurance is for unexpired means prepaid. Paid more. Unexpired, not yet expired. 1,000. Real is 3,000. Your scooter repair charges is 200. Salary, how much still payable? 2,000, that should be added. It becomes 11,000. Interest on capital, your working note is there. 50,000 into 5 by 100. It works out how much? 2,500. Depreciation on furniture, you calculated how much? 500. Then when you add the figure, it will be equal to 37,400. The net result will come 17,800, which is the net profit. So from the credit side, we have all the expenses have been deducted. Whatever the difference comes, 17,800 goes to balance sheet capital account. We'll move on to balance sheet. Here, cash at bank is an asset. Scooter is an asset. Building is an asset. Furniture, it has gone depreciation how much? 500. The value is 4,500. Debtor, no new RBD, we have to receive from the customer. Closing stock, 10,000. This is one prepaid insurance means unexpired. Unexpired insurance is how much? 1,000, nothing but prepaid. Come back here. We have taken the loan, bank overdraft. How much you have to pay? 10,000 you have to pay. Your creditor, you have to pay how much? 16,000. Outstanding wages you have to pay. This is amount 200. Then outstanding salary you have to pay 2,000. You have to pay. This is outstanding salary. Your outstanding salary will come 2,000. Capital, your opening balance is 50,000. For that, you got an interest on capital at 5%. 5% interest is there. 5% on 50 is 2,500. You earn the profit of 17,500. It becomes 70,300. 50 becomes how much now? 70,700. How much you earn? 20. Already deducted how much money? 2,500. You got 50, 70 means 20,300. How much already drawn? 2,500. Means you got earn more of 22,800. That is, you got here 17 means 22,000. 50 becomes how much? 70,300. So that is 20,300 more. Out of the how much you have drawn? To add back 2,500. How much you have to earn more? 22,800. So it will tally for 98,500. So before conclusion, I will explain once again. They will give the trial balance like opening stock will come, trading account credit side. Purchase and sale, purchase debit side, sales credit side. This is sales return, this is purchase debit side, sales return, credit side, purchase return. Then carriage inward comes trading account. If there is outward, profit and loss account. General expenditure, profit and loss account, debit side. Insurance, profit and loss, that is nothing but insurance premium, profit and loss account, debit side. Scooter repair expenses, profit and loss account, debit side. Salary, profit and loss account, debit side. Cash in hand, we have got a money, asset. Scooter is a value, asset. Furniture is a asset. Building is a asset. Debtor is a asset. Wages, trading account. Here when you say discount means received. Profit and loss account, credit side. Commission, which side is there? Credit side, received. P&L account, credit side. Then creditor is a liability. Capital is a liability. He invested. We have to pay back him how much money? 50,000. Then unexpired means prepaid. That should be deducted from insurance. Then assets set up the balance sheet. Salary due means outstanding. That should be added to salary. Then liability set up the balance sheet. Wages, it should be added to wages. Then liability set up the balance sheet. Interest on cap. Who pays the interest? Firm pays the interest. Here verse here. Who contributes? The owner contributes. Who is the receiver? Business is the receiver. Who has to pay the interest? Business has to pay the interest because you are doing the final account of the business. So, who pays the interest? The firm pays the interest. For a firm, it's a loss. For him, it's a gain. Then, depreciation. Your furniture has been come down by 10%. The value of the furniture, 5,000. 10% means 500. Unsold stock is how much? 10,000. Not yet sold. Trading account, credit side, asset set up the balance sheet. So opening stock like this, purchase 67, how much return? 3,200, wages 1,200, how much still payable? 200, it becomes 1,400, your carriage inward is 1,400. Your sales is 1,12,000. Your sales return is 4,600. Unsold stock, closing stock is 10,000. Then your general expenses, all indirect expenses will come. Profit and loss account, debit side. Your general expense is 2,400. Your insurance premium is 4,000. How much unexpired? Not expired, still not expired. You have paid, you already paid 4,000. Actual amount payable is only 3,000. Your repair charges is 200. Salary paid 9,000. How much still payable? 2,000. It becomes 11,000. Interest, firm pays the interest on capital. What's the value of the capital? You contributed 50,000. How much interest they are going to pay? 5% on that. It works out 2,500. The value of the furniture is 5,000. It has been come down by 10%. This is depreciation on furniture. This is depreciation on furniture, 500. Then whatever the difference comes is a net profit transfer to capital. When you prepare the balance sheet, your cash at bank is an asset, scooter is an asset, building is an asset, furniture minus depreciation 500, balance is 4,500, debtor is an asset, closing stock is an asset, prepaid insurance means unexpired. We have paid more, next time we'll pay less, that's all. We pay more now, next time when you are paying the insurance, we are going to pay less. Then bank overdraft is a liability, creditor is a liability. Oh, we have to pay the outstanding wages 200. We have to pay outstanding salary 200. This is both from the adjustment. Your capital balance is 50,000 and the firm pays the interest of 2,500 should be added. Your profit during the year is 17,800. Your capital work out how much money? 70,300. 50,000 becomes 70,000. There is an increase. It shows there is a what's called improvement in the business is there because previously it was 50,000, now becomes 70,300. Definitely there is improvement. He is working very hard so that your capital has been increased. the major point of the trial balance. Now, what you have to do in the exam now, when the trial balance is given, you go through the trial balance and adjustment 2 or 3 times. This is a very basic for you. You slowly you go through, calmly you can go through the trial balance 2 or 3 times. First time you may not understand. When you read the second time, you understand a little bit. If you, and once again you go to third time, fourth time, slowly you go. But when you're answering fast, no, we make the when the adjustment, no, you make the adjustment in the pencil so that when the particular adjustment comes, you can understand some adjustment is there. Unless you move, no. So what you have to do, no, you take the pencil, make the mark of the adjustment. So when the mark is there, so some adjustment is there, you'll stop over there and find out what's the adjustment, then we can do it. So easily you can do. Very good problem we are going to solve. See here now, it's a definite problem. It's going to come in examination for 15 marks. Be careful, be attend, you prepare the properly. Accountancy is not at all intelligent. It's only in hard work. It's only a hard work. Please work more and more. Get the result more. Nothing is there. So here, just work. Here, accountancy just a work. That's all. If you work more and more, by chance, if you prepare and get the result, you feel very happy now. You prepare trading account, you prepare profit loss account, and balance sheet arrive. If you arrive, you feel so much happy that I have done the problem. That happiness is always be there. So please work out very hard, and we are already solving the 7th problem is over. In the next session, we'll have one more good problem. Then 8th problem we are going to do in the next session. Till then, goodbye. Meet in the next session with a good problem.